Alright, what's going on, traders? This is Taylor again, and I'm filling in for Chandler tonight doing the midweek recap for Thursday, June 29th. So kind of a quiet session here today, and we go into the close, as far as the S&Ps, the QQQ, and the names like Tesla, Amazon, and Apple, we go into the close in a bunch of 15-minute and 30-minute squeezes. So basically kind of a chop fest here today, but as far as the S&Ps go, if you check out the 15-minute chart here, the SPX, it's kind of been the tail of the 15-minute squeezes. So going back to last week, we went into the close of the 15-minute squeeze on Thursday. Then you got the gap up on Friday, and they squeezed the shorts all the way into the close. And then yesterday morning, you got the Teslas, the Amazons, etc., and the indices. Really solid 15-minute squeezes there with the buy signal from the Big 3 indicator. And things are looking pretty good out the gate, but obviously, as we all know, we got the flush, and then today's kind of a back-and-forth quiet day. So remember, tomorrow is quarterly expiration, and then you get the first day of the new month on Friday. So in terms of a few of the things that we covered yesterday as far as, what do we have to see here today for the bulls to have any chance of potentially pushing this market higher into expiration? One of those things was the S&Ps need to hold above 3,800, and they did test it a couple of times here today, but you got the close above 3,800. And then the other thing we're looking for was a flush in VIX. So the volatility index was definitely heating up there at one point. That bad boy was up, 3, maybe 4%? Which, that's not big for VIX. But if you're going to get a rally in your market into the weekend, you need the VIX to trade lower. So it was popping at one point, but then it does flush a bit there into the close. So really at this point, guys, I think heading into tomorrow, we could gap up or gap down. Let's take a quick look here at the futures while we're at it. All right, S&P's kind of quiet. The Qs, yeah, the futures are pretty quiet here. But as far as tomorrow, assuming we don't gap up or down, focus on those 15-minute squeezes. And if you look at the put-call ratio here, again, just giving y'all the things to take into consideration. You did get a spike here today in the put-call ratio. So typically anytime the put-call ratio spikes towards 1, tends to mean that folks are getting short. So potentially, early tomorrow morning, you get the 15-minute squeezes on the S&Ps, the Qs, and the Apples, etc., firing to the upside. Folks who got short here today and folks who got short yesterday could feel a little bit trapped. And who knows, guys, maybe we get another 15-minute squeeze. That triggers a rip all the way into the weekend. So, things to watch there on the S&Ps. However, one of you asked a pretty good question in last night's video. It was, let me see, a couple good questions actually, but the one I want to talk about in tonight's video is Prabhish's question. So, Prabhish is asking, hey T, this is basically, isn't this your textbook short? The S&Ps are in a downtrend. We're under the daily 21 EMA, no positively stacked EMAs, and then you get the bounce towards that daily 21 and you start to trade lower. All right, so isn't that my classic short? And good observation and good question, and to your point, that is typically my short. And for what it's worth, that's kind of textbook. You have your downtrend, and your bounce to the daily 21 makes for a great short. You get the rally, you get the break back under the 21, it makes for a great short. So to answer your question in terms of why am I not short in the S&Ps here, and, for what it's worth, we could certainly, we could roll over and puke from here and go on to make new lows. But in terms of why I'm trying to be a little bit patient, one important thing is as far as my sell signal, things are a little bit neutral right now. Daily chart, 2-hour chart, 1-hour chart, 30-minute chart, as far as the Big 3 signal, for now it's a little bit neutral. So, on these rejections off the 21 EMA, I'm a little bit more inclined to wait for lower time frame sell signals. But for now, a little bit more important than that, or equally as important, I should say, if we look back at the, the reversion to the mean back in early May, which was obviously a great short, and then the reversion to the mean back here in early June, which of course was a good short. Major thing to keep in mind is if you look at those moments in time on a weekly chart, the big W, that reversion to the daily 21 back in May, that brought you pretty pretty close to your weekly 21 EMA. Your reversion to the daily 21 EMA in June, that also brought you pretty close here to your weekly 21. So the thing for me is I got a lot of respect for the weekly chart. And a lot of times in a downtrend, the best shorting opportunities are going to be a little bit closer to that weekly 21. But then if you just think in terms of reversion to the mean, it's just kind of a coincidence the last few times the market made a reversion to the daily 21, the oversold bounce, the short squeeze, kind of a coincidence the last few times you happen to be closer to the weekly 21. So the major difference at this point is, yes, we're up there at the daily 21, and as far as the structure of the daily chart, that's my short, right? It really is textbook, but the difference between the rally that we're seeing right now, the last 2 to 3 weeks, versus the rallies that we saw back here, we're really not getting too close to that weekly 21 EMA yet. And like I said, we could roll over, right? So that daily 21 rejection, it could be a good short. But for me, where I'd like to get aggressive on the short side is a little bit closer to that weekly 21. And I think a good perspective here, or a good visual rather, if you look at the uptrend that we had in the QQQ, you put in the COVID lows and then the market starts pumping in crack cocaine. Playing that uptrend, your best buy the dip opportunities are down there at the weekly 21. Like, that's where you can really get aggressive. That's where you can have a tight stop. Basically a close under the weekly 21. But then your upside target is like +2, +2 average true range moves to the upside on the weekly. So those reversions to the mean in the uptrend, in my opinion as a swing trader, that's where you look to get your most aggressive. Same thing here in the downtrend. So even for the QQQ, it's rallied for a couple of weeks here. Puts in the low down there at 270. We're a bit closer to 300. But for now, this bounce only takes you to about -1 ATR on the weekly chart. So again, we could roll over from here, but in terms of playing the trend, I love to short the bounce to the daily 21, but I'm really mindful of doing that when we're a bit closer to the weekly 21. So from a weekly charts perspective, the QQQ here, for example, this could rally all the way towards, call it 320, and still be in a weekly downtrend. Still have a bearish weekly structure. We're still going to want to short it. That move from 280 to 320, if you load up on shorts here, obviously that's going to be a little bit painful. The S&Ps here, as far as weekly structure, keep in mind the S&Ps are firing a weekly squeeze short. This could rally to about 410, 415, still be in a weekly downtrend. I'd still want to short it. But you're trading here at 380, that rip to 410, 415. Not going to be all that comfortable. So it's not to say we're going to make a reversion back to the weekly 21, but hopefully that makes sense. So to your credit, this is a... as far as I'm concerned, that's a textbook daily short. I think we get our best daily entries a little bit closer to those weekly 21 EMAs. One last example here is if you look at something like UNG, for example. Taking entries up here at 2 to 3 plus ATR on the weekly chart, even if they're really clean daily charts, right? Even if the daily chart is textbook, it all gets a little bit suspect. Because at any given point, this could come on in to make what could just be a simple weekly reversion to the mean. So UNG is a pretty good example because recently you had a nice looking daily squeeze. Then it pulls back to the weekly 21. So hopefully that makes sense. I think it's a pretty good question, and I think as far as tonight's video, guys, we kind of covered a little bit of the short term. A few things to watch heading into the big expiration tomorrow, and then of course into Friday, and then a little bit more of the bigger picture here. We're in a downtrend. I'm looking to short the market, but for the S&Ps and the QQQ, if they could get there, that's where I would look to aggressively get short. And as I say, back up the dump truck and start getting on some call credit spreads and things of that nature. So that is what I've got for you guys tonight. As far as a few quick picks before I let you go, and the theme tonight being short. So for a couple of suggestions here, we still got our call credit spreads here in Rivian. We actually added to it today. So Rivian looks pretty good. We think if the market can break down, or I should say when the market breaks down, we're looking for Rivian to head down a little bit. I don't have 2 ATR on the chart, so I'm not exactly sure where 2 or 3 ATR under that daily 21 is. But as far as a price target, we're looking for a move down to a new low. So short Rivian, but then a few more suggestions here. A few things on my watch list. Coin and pretty much for now anything Bitcoin related. Looking like a good short. As far as Bitcoin, it's a little bit oversold here, so I think you prefer to short that on the bounce. But the coins, the MARAs, you can short that on a bounce. The riots, you think you can short that on the bounce. And then one that TG covered in the options room today is actually, believe it or not, Build-A-Bear Workshop. So, not a name I tend to focus on, but you've got weekly 3-day bearish squeezes, and I got my sell signal on the 1 hour, 30-minute, 15-minute chart. So if the market catches a little bit of a bid here into Thursday, Friday, if you could get a bounce in Build-A-Bear Workshop, I think it makes for a good short. So a few things for your watch list there, guys, but for tomorrow, we'll see what the market has in store, and I think a lot of the early move could be triggered by the 15-minute squeezes you're seeing here on the indices and the stocks like the Apples, the Amazons, and the Teslas. So I hope you guys find this helpful, and I will talk to you this weekend.